Let's get ready for a powerful fireside conversation with investors on shaping India's consumer landscape. For this, we have Mr. Mahesh Ramachandran, founder of CIGS TechInnovations, and Chandran Krishnan, Managing Director and CEO of Campus Angels Network. This session will be moderated by Mr. Shyam Sekar from Startup Xperts. Mahesh Ramachandran is an entrepreneur at heart and an investor by choice. He is the founder of TechInnovations, an investment platform that provides liquidity to founders and investors alike. He is also a part of the leadership council of FinBlue, the fintech. Chandran Krishnan is currently the managing director and CEO of Campus Angels Network, which is focused on nurturing and funding startups that are incubated at university campuses. He is also the principal advisor at SSN Incubation Foundation. In addition, Chandran is a director on the board of IIM Calcutta Innovation Park. Previously, he has been CEO of the Chennai Angels. Our moderator, Mr. Shyam Sekar S., is a growth coach and startup mentor expert with over 25 years of professional experience. He is the founder, chief mentor, and strategist at Startup Xperts, a business consulting and digital marketing firm aimed at supporting startups and SMEs in India and abroad. His entity, Startup Xperts, is a pioneer in the startup consulting arena in India. Let's welcome on the stage and learn more about shaping India's consumer landscape. Let's have a huge round of applause for all of them.
Okay, I think it's an interesting discussion. I would like to bring out some of the sparks and some of the thought process, probably that could be of much use. We have seen a lot of consumer brands growing over the years, and with that being said, there are silent partners who have been supporting the cause of so many D2C brands, spearheading their growth, momentum, and making waves. And many silent partners are there, and I'm here with two of the silent partners who will raise a fantastic voice in terms of giving those interesting insights, and that's the investment community, right? And welcome again to good friends Mahesh and Chandran. Please give a big hand once again. Okay. We have been, just to give a context, we have been part of jury panels in many other sessions, including the IITs. So I have seen them in close quarters, excellent brains. But I'm going to share over the next 30 minutes some interesting, powerful questions. And towards the end, if somebody has any specific questions, probably we'll leave it couple of minutes open to the forum, right? Okay, so let me start with you, Mahesh. See, with a lot of lifestyle changes, digital adoption happening, especially over the last 5-10 years, it's been pretty fast. And what kind of market dynamics and trends that are influencing the consumer landscape in your perspective? How does it?
Hello, good morning. Let there be light. So it was wonderful. Thank you so much for inviting us here. And it's a great privilege to share the panel with my good friend and learned speaker, Mr. Chandran. Shyam, that was a wonderful question. And before I commence, when you invited me to participate and said it's a fireside conversation and in this hot summer in Chennai, I was a little intrigued. But I think the great question actually put me into a nice space. The consumer landscape in India is being significantly shaped by digital adoption and evolving lifestyles. The surge in internet users, as we know today, mainly through mobile devices, has expanded the consumer base, especially in semi-urban and rural areas, creating opportunities for tailored digital solutions. The digital transformation that we see is pivotal for attracting angel investors, as it signifies opportunity for scalability, and we are in a position to reach a vast, massive market, and that is Bharat, which is also the rural side of India. The digital transformation is also evolving into interesting consumer behavior, such as interesting health awareness and a preference for sustainable products that are shaping new business models. For seed fundraising, startups that align with these shifts and demonstrate a clear understanding of these market dynamics are more likely to secure investment from angel investors and seed networks. Thank you.
Thanks. I think that's an interesting opening. Chandran, your take on the influence.
Yeah, so I wanted to spend a few minutes giving some background about me so that some of the things I'm going to speak later make sense. I had an introduction made here. Essentially, I studied out of IIT Madras and went to IIM Calcutta. 35 years of corporate experience. Started working in Godrej. Godrej was my first job. Then I went on to work with HCL Technologies, and I worked in CK Birla Group, Rane Group, and Hinduja Group. 35 years. And last 5 years, I've been with the startup ecosystem. I became the CEO of Chennai Angels. And in the corporate sector, I had opportunity to work in markets like US, North America, South America, UK, Europe, and Australia, where I headed businesses, built businesses from scratch, grew up to as big as 400 crore in one business. But last 5 years when I joined Chennai Angels, I realized that we are dealing with entrepreneurs who had nothing. I mean, in the corporate sector, you have a lot of money, you have brand, you have people, you have resources, you have organization. It's easy to build relatively, but entrepreneurs, when I started getting involved in Chennai Angels, that was a real mind opener, and had to completely unlearn and relearn everything. And I've been part of about 50 plus investments in Chennai Angels, then went on to SSN Incubation Foundation, which is a incubator, part of HCL Group, and they requested me to come and head that. I saw a huge gap for startups, MSMEs, in the go-to-market phase where they need support and there is no funding available, and that's how Campus Angels Network was started. So we have been heading that for the last 1 year. We are doing our first 4 or 5 investments. Mahesh also is part of our Campus Angels Network, just I want to take credit for that. But yeah, and I personally have invested in about 15-20 startups, consumer side. And as you know, consumer side is such a huge area. We have starting from education, electronics, entertainment, food products, your maybe housing, maybe you can talk about healthcare, housing. So there are so many, if you look at the overall market, 3 categories. We have consumer, we have industry, we have government. And consumer is the predominant space. Industry works for consumers and government takes services from industry and also is a provider for consumer sector. Now, consumer sector has really picked up in the last 5-6 years. What I have really seen in front of my eyes, after the COVID wave, there has been digital adoption has really gone up. The kind of innovation which is coming in the different sectors, so many companies have come. Like I said, personally, I've invested in many of the companies here. And what I see is there is awareness about nutrition, there is awareness about healthcare, there is awareness about sustainability. So all this is changing the kind of startups which are coming to come into the consumer market. Consumer market is, as you know, it's not easy to build. You need to have real strength in terms of branding and also the logistics and also the marketing part of it. And a lot of innovation happening in digital media. Very exciting phase what we are going through today. And I think later I would like to touch upon how we evaluate startups. So I'll come to that and next.
Let me continue with the flow. So that's my next question. So I think predominantly, how many of you here are looking to raise funds for your own startups out here? Okay, we definitely have a few potential. So I think on their behalf, I would like to ask you this question. As an investor, how do you evaluate investments in consumer brands? What will be the top couple of 2-3 criteria that you would like to
so I think this is the most important portion which I'm going to speak now. There are an entrepreneur's journey, there are 5 phases. First phase is idea phase, where idea validation. You have an idea, you think there is an opportunity and you want to build something, it is important that you validate the idea. A lot of people have an idea, they run, jump, they start, metaphor, they build a product and they go to market, find that nobody wants to buy their product, and they really struggle because they have not done their idea phase well. It is important to do the idea validation very well. You need to go to and meet about 100 people who you think are your prospective customers, do a thorough research, identify 10-15 problems. A lot of people come and think, I'm going to build something which is going to be 30% cheaper than what market is giving and go and build. But anybody can bring down their cost. So that will not be a sustainable advantage. You need to have 10 to 15 parameters which will differentiate you from competition. So in the idea phase, if you don't get at least 5 to 10 differentiators you can build, it is not worth doing that project. So it is very important to do the idea validation right. So that is the phase 1. I mean, I can keep talking. There are a lot, very important idea validation phase. Second phase is the product validation phase. That is, you had an idea, you went and checked, you found some gaps. Okay, now you want to build something, and you build a version 1 product. See, if you look at Apple, Apple, they started with version 1 product, which also sold, right? People could surf, they could, they could browse. I mean, they could send mails, messages, they could see movie, they could, make phone call. That was good enough, and it sold. And today we are in some 15th version, I think, and they are continuously innovating and adding more features. So the first version of the product which you build should be good enough that customers will pay and buy. And so the second phase is building a version 1 product which has enough features for customer to come and buy from you. It should give them the return on the money they are giving. It should be a wow factor, and they should get something different than what is there in the market today. So that is product validation phase. A lot of people, what they do is build a product, they find 4 or 5 people have bought, they jump and they start scaling. They hire people, they start putting production facility and then go to market. They get into difficulty because the early adopters are early adopters. I mean, it's important to know that you get a proper validation. So product validation is the second phase. Don't jump to the next phase unless you have the product validation phase right. The third phase is go-to-market phase. Go-to-market validation. What channel to use? What direct sales or distribution or advertisement or social media or e-marketplace or e-commerce. You need to get the right channel. For every product, there is a right channel which you need to adopt. Good channel strategy is important. Customer engagement model is important. How do I engage customer? How do I make it sticky? The third is revenue model. How do I charge, and pricing? How much to charge? So this is the go-to-market phase where we need to get all these 4 things right. So we need to get idea right. We need to get the product validation right. Then we need to get also these 4 components right. And only then we go to the 4th phase, which is called the growth phase. And then the 5th phase is scaling phase. And many of these startups, we get stuck in 2 and 3 and 1, 2 and 3, 4 and 5, becomes challenging and difficult. And funding perspective, I want to complete this particular answer.
That's right, yeah.
And when it comes to idea validation, nobody is going to support you. You have to bootstrap, you have to put your own money. And it doesn't cost much also. You have to go and do only a study. Second phase, which is the market validation phase, product validation phase, you need money because you have to build something. You have to go and try it out with some customers. You need to get some early customers, and you need to get paid customers. So you need typically, any business 10-15 lakhs is enough to do the second phase. And for deep technology, you need more. Today, here again, nobody is going to support you. Either you put your own money or go to family and friends, or there are a lot of grants available today, government grants available. Even for MSMEs, a lot of grants are available. There is DST, there is MAITI, there are a lot of different departments are giving you grant. For good projects, you can get grants. And for that, you need to join an incubator. So that is another dimension. So second phase, you can get some money. Third phase, go-to-market phase, is where you will need more money because you need to hire people, you need to put production facility, you need to meet a lot of customers. So go-to-market validation phase, you need 1 to 2 crore of money minimum to cross that phase. And once you have got a good go-to-market strategy which is validated, you are getting repeat customers, you are getting, you are getting good margin on the pricing which you are charging. You need to ensure a healthy margin. That is very important. So once you cross third phase, then you have angel investors who come in fourth phase. Then you have venture funds who come in the fifth phase. Okay. So this is how this whole market works. And in the go-to-market phase, Campus Angels Network, what we have started is focused on the third phase. So there is where we support the small companies to take funding. And there are accelerators. There are some MAITI and DST also got some schemes. So this is how the whole funding operates. And this is how the journey of an entrepreneur goes. And all these phases are important. And we need to cross them one by one and need to ensure that every phase is completed properly before you go to the next phase. I hope I have been able to give some.
I think that's pretty detailed and well expanded.
Thank you.
Mahesh, your insights on how do you spot those specific investments? Where do you?
Thank you, Shyam. It's a very important question, and Mr. Chandran very nicely articulated the key phases and what happens there. I'll just put it in a very nutshell for lack of time. So remember these 5 T's. The 5 T's, the first T is a thought, which Mr. Chandran said is the idea itself. So who is your customer? That also answers who is not your customer. And what is your value proposition and how are you going to monetize? And that part is very important. In the D2C brand, also think about the unit economics. The second T is the team. You need to have people who are complementary to your own strength. You make sure that if one is technology, another is finance, another is marketing. So that's the next T. The third T is technology. Make sure that you adopt technology, leverage technology, use it in a disruptive way for you to grow. The fourth T is traction. The traction is what actually is the proof of the pudding. So we always want to make sure that there is some traction. That's an indication that the customer is willing to pay for it. And the fifth and important traction is the total addressable market. Total addressable market is how big is the size of the market. As we are in Tamil Nadu, let me actually quote from Mahakavi Bharati. He said, Peridinum peridikail, aspire for bigger than the biggest. As Valvar would say, Vellathanayadu malarneetam maandardam ullathanayadu uyarvu. So you have to aspire to do bigger things. Only then you would actually have ability to scale to a very big extent. And those are the 5 T's, my friends. So thought, team, technology, traction, and total addressable market. So you can remember that.
Wonderful. I think you put it very beautifully. I think from what he spoke, there are 3 items I did not emphasize. I think I should emphasize. Like he mentioned, team is very important. And to navigate the 4th and 5th phase, you need to have a really solid team. Till the 3rd phase, it's more about proving the product. Okay, but what is important is a good team only can take you to 4th and 5th stage. So team is to be well bonded, complementary in terms of skills. I think that is very important. That is, I think, something which I learnt.
Yes.
2 more points. Technology, very important. What you are building you should use as many technologies as possible. You build in as much innovation as possible. Should differentiate so that you got lot more moat than what the competition has got. So using the right technology and building the product is a very, very important thing. And the last T was TAM. What you are doing should be, the market should be large. Investors will not be interested to support startups which are working in a small market. So I know a lot of people come and say, I ask them, what is the total market size in India? They'll come and say 40 crore or 50 crore. Well, that is not going to interest anybody. It has to be 1,000 crores or 2,000 crores. I'm just saying, addressable market is important. And the idea, the product should have enough legs to go and achieve a good share of a very large market. And that is very important.
Yeah,
Thanks.
I think there is, if you do the 5 T's, there's a sixth T will come automatically, which is actually the thumbs up, right, to your business to grow. Very nice. In fact, my next question is on one of the T's, which is basically technology. Like technology disruption drives innovation, right? How do startups leverage this and raise funds during the seed stage? Your thoughts, Mahesh?
Thank you, Shyam. It's actually very important because even any business is nowadays technology business in a sense, because technology and business model are kind of intertwined. So make sure that you use technology to your advantage. Particularly, it gives you a non-linear scale for certain areas. It helps you to address the fixed cost. It addresses you to get into a good unit economics. So technology disruption as a powerful innovation in Indian consumer space. So advances in AI, machine learning, and data analytics, you may think it's actually far-fetched, but today I can tell you, one of our portfolio companies replaces the human call center agents with the machine learning, which means that they can call a customer or take a customer service and a fraction of cost, and it looks as if they are talking to a human, and it can talk in 14 Indian languages. That's amazing. So think of things beyond what you can actually normally look at. And then the startups that effectively leverage technology can give differentiated product. And today we know what is happening in any of the worlds, like whether it's actually a Uber or a Swiggy or any of those things, and try and see if you can partner with some of the technology core players as well. For attracting seed investment, as I said, startups should focus on how their technology create competitive advantage, enhance customer engagement, and improve operational efficiencies. Demonstrating robust tech-driven business model can significantly appeal to investors looking for solutions.
Fantastic. You would want to add, because you touched upon technology, any other points?
No, I think I covered that a little earlier. Yeah, technology, leveraging technology is important, and every day something new is happening, every day some innovation is happening. Be in touch with one of the academic institutions near you, see the kind of research which is happening there. You will benefit a lot if you associate yourself with a good institute near you. I'm talking like organizations like IITs are there. It's too large. So many people go there, so they don't have time to give you. But there are other colleges like SSN or Vailtech or VIT or PSG, Sastra. There are so many universities who are doing cutting edge technology work. They've got, and if you want to improve your product, please reach out to some of the academic institutions. They'll be able to help you.
Fantastic. So not to fear technology. Technology, in fact, people think if it's a tech business, right? When you look at companies like a Swiggy or a Zomato or a Uber, any of these companies, right? They are not technology companies. They leverage technologies. It's a logistics company. It's a food delivery company. It's an aggregation, cab aggregation company, transport company. But end of the day, if you drive the business through technology, the scalability becomes much better and bigger, right? Having said that, I think it's an interesting landscape that we have all seen. And in your opinion, Chandran, how do you see over the next 5 to 10 years as the evolution of the consumer landscape, and especially from the entrepreneur's perspective, how they can strategically align themselves in this space?
Mahesh.
Okay. Thank you, Mr. Chandran. I think it's also a very interesting question, right? So some of the macroeconomic things we need to take into consideration and the microeconomic then. So the rise of middle class, by 2030, nearly 80% of household in India will be middle income, up from 50% today. So from 50%, it is becoming 80%.
Wow.
The middle class will drive 75% of consumer spending. So remember that. Increased spending. So a household move into the middle and high income means that they will spend 2x of more money on the essentials and 3x more on services. And that's also a growth that you are seeing. Digital adoption, we are having more than 1 billion internet users, and that means this digital adoption is something that you need to thrive on. And we are actually sitting in one of the most innovative fintech ecosystem in the world, which is the UPI and other things which try and leverage every bit of that. And personalization and premium adoption of technology for specific customers. So mass customization is the name of the game. And sustainability and local brands. So sustainability means that you need to demonstrate to your customers that you are also actually a good company. What makes the difference between a good company and a great company is one that got good services, but a great company also provides a better world. So in the investment specific opportunity, I see that the e-commerce, digital finance, personalized consumer services, leveraging technology, including the likes of the customer experience through AI and machine learning, will make it a very big thing. So look forward to the technology adoption, sustainability, and other areas. For example, Aether Energy, Pool, Sunroof, Yulu. You can actually name and look at all of these companies in the internet. But in the lack of time, I will actually shorten my thing, but allow Mr. Chandran to add on any other points that he may have.
Yes.
Thank you. So like I said in the beginning, there are some areas where there seems to be a lot of interest, a lot of people are coming in. Healthcare, like I said, mental wellness, then nutrition, okay, and also solutions which are sustainable. So these are the kind of trends we are seeing. And I think they will continue. A lot of people are coming with new ideas and finding niche areas to build new products and solutions, specifically, the areas which I mentioned just now, and that's where I'm seeing a lot of interest happening. As far as products are concerned, there is other areas like entertainment, where a lot of startups are trying to find opportunities to build something new, and education seems to be already a little saturated, and there is so much of work happening in the healthcare segment, and so we are seeing a lot of action happening in various fronts. On the finance side, there is so much of innovation happening, consumer finance side, and besides products, you have these so many segments which are seeing activity. There's opportunities plenty for growth, and many of you are already in some space, so you need to see your adjacent space or your own space how you can grow. And one of the points which Mahesh mentioned in the beginning about thoughts, I think is very important. Ideation is important. Talk to your co-promoters. Think of ideas. Any idea, one idea is enough to completely transform you. Think. As you move along, keep thinking, keep talking to people, and I will get so many ideas which can completely transform you. I mean, these are the points which I would like to leave it with you.
Fantastic. And Mahesh, one piece of advice to those looking to build through investments, what would that advice be to the entrepreneurs?
So do a due diligence on yourself. So that means essentially try and see if you have the ingredients for the 5 T's I mentioned. Most often than not, we may underestimate the power of complementary team members. We need to have co-founders. If they are not co-founders, bring other professionals, and not necessarily friends and family, people who are by professionally able to contribute to what you are actually doing. And that's a very important area to focus on. And also, as a growing company, we may actually kind of ignore certain parts of the compliance and other requirements. And as investors, we actually give a lot of importance to governance and compliance. And in order to be investment ready, make sure that you are able to do this. And today, it is becoming a difficult thing to actually keep up with all the changes in the law. But having said that, it's important for an external person maybe to audit what you are today and make any appropriate changes that you need to have. And then finally, I think follow your passion. I think you are all great to be actually pursuing entrepreneurship, and I respect it a lot. So I think follow your passion and you'll be extremely successful.
Fantastic.
I fully endorse Mahesh's views. I think enough has been said. Thank you.
I think it's important that even though you are driving against rough weather, we tend to lose out on the compliance. I think very well put. Most often, when you look at investment, fundraise, go-to-market, marketing, technology, I think we miss that very subtle part. And I've seen in close quarters some of those investors as well as the companies who are trying to raise funds. Compliance is one big asset. Irrespective of all of that, if you are not compliant, investors might be even more hesitant in spite of so many boxes that you might have actually ticked, right? Having said that, today incidentally, it's actually, what's special today? Anybody? What's special today? There is some, it's called as some day. There are so many days, right? Every day you have something. Somebody else? Yeah. Okay, something very important. Ashmi comes virtually every month, so yeah, good attempt. Anyone else? Somebody said. It starts with world. Okay, today is a World's Voice Day. Okay. Incidentally, I also run a startup called Voxit, a podcast app platform. And I came to know in the morning that it's a World Voice Day, and we are too busy preparing this. I want to connotate one interesting point before we sum it up. See, we have a lot of voices, right? Too many consumer brands, too many Me Too products and stuff like that. And in that cacophony, you will need to stand out very different. And these 5 T's and that insights, right? We are privileged to hear from two of the, best of the brains, 2 best brains right out here, in terms of how you could make your voice heard, not only to the consumers, but also to the investors. I think that's an amazing piece of advice and insights from Mahesh and Chandran. Thank you very much, gentlemen. I think once again, thank you all for this interesting, engaging conversations. I would like to leave it open just in case we have a couple of minutes, any 1 or 2 questions that you might want to ask any of the panelists here. Yeah, please. Can somebody share the mic, or we could probably hear you from here.
Good morning, everyone. My name is Shrikant. I'm also a bit of a strategy consultant. I loved all of your insights. I just wanted to add one more little insight, if I may. I've noticed that a few of the small-scale companies that I am consulting with, they fall into this free fallacy. They get something for free, a free CRM or a free software or a free environment or a free B2B marketing tool. And they, fall into the trap of extracting as much from the free, thing that they get, the bandwidth of the free element that they get, and they lose maybe even 2 quarters, in struggling with the limitations. You don't get much from a free software. It offers you very limited, very basic, very constraining capability. And I thought about it after you explained the 5 T's, sir. And I think, my voice on World Voice Day, my message is, if a free software or a free tool is going to limit you from achieving the best out of the 5 T's, break free from it. Don't fall into the free fallacy. That's what I wanted to share.
Okay. Any other questions or any thoughts?
Good afternoon, gentlemen. Thank you for the Fireside. I think it's put a lot of fire in the belly of all entrepreneurs here. My name is Gandharv. I'm the founder of a QSR brand called Roll PV Roll, and I also head the NRAI, National Restaurant Association of India's Chennai chapter. So my question is pertaining to the industry I am from. So what are the new trends you see, especially in the food industry, in the QSR market, going forward? And what role will automation or technology you're saying which we could leverage further to go further?
Okay, who would like to take it?
See, I find a lot of startups have come to us. I mean, I've been evaluating so many startups that are coming with new food ideas. Okay, the problem I have is it needs a lot of muscle to build something in the food area. Many startups have come. They are able to go up to 2-3 crore. After that, they are not able to go, and they are burning because go to market is very tricky, and you may have a good product. You may claim a lot of benefits over other products, but to change somebody's food habit, we find is humongous. People are not so easily, you can say it is very healthy for you, it can do this for you, miracles for you, but people don't change. So the marketing costs go up, then you lose control. So need to be very careful where you are getting into, especially in the food area. That's what I would like to advise.
Yeah, we can obviously catch up right after this conversation over a break. But very good, interesting insights and thoughts. They have given the brush to your canvas. It's up to you to paint it and make it look colorful and nicer. So, ladies and gentlemen, thank you all once again.
We have one more question.
Okay, all right. It's it. The time is up. So, yeah, go ahead.
Yeah. I appreciate all the insights. Like, it was really great. One question, like when we are stressing more about technology, there is different phases. Like, if you're a bootstrap founder, it's going to be very hard to invest on greater technologies. And how do you emphasize, like, at what stage the founders should be, worried about the technology they need to, sort of invest their time, or like which technology they need to choose? Like, is that going to be on the ideation phase, or like on the product validation phase, or even if it's going to be a product validation phase? If I'm going to be a bootstrap founder, I ain't got like so much of funds available to have a AI and ML engineer from one of those biggest corporates, and it's going to be very hard for me if I'm a non-tech founder. How do you answer that?
I'll take this question.
Yeah,
I think it's important for many of you. See, you have got a lot of incubators which are coming up now. You would have heard, and most of the institutions, they are having an incubation center. You should join an incubator.
Okay.
Because incubators, they give you workspace, they give you access to their technical resources, they give you access to their labs and fabs, they give you access to mentors, they give you access to government schemes. And you get everything in one place. And for a small cost of 3 to 4% equity, which is worth it, because you don't have money, you get everything. Please, whoever is in the early phase, you have still not got into the go-to-market phase, or struggling in the go-to-market phase, please consider joining an incubator.
Okay.
You will get all the support you need.
And you still suggest we need to choose a technology stack which is like far more important for a MVP or a validation phase?
See, it's important to ring fence your product. You should need to have as many technologies, multiple technologies you can use. You need to create a wow factor. You need to actually create a complete unique product which is giving high ROI to the customer. So you need to figure it out. I don't know what products you are building.
Okay, no, like, you know, the point is like, I'm in a lot of groups where the founders are, especially the technology groups, and where everyone says like, you know, you build a product even with a no-code form builder, not even a technology involved, but solves a customer problem. So that's what like most people say.
That's where you start.
Okay.
But quickly start, building technology.
Okay. Okay.
Create that version 1. You need not to have too many technologies in version 1.
Okay.
But as you go along, version 2, version 3 has to start.
All right. Okay. Thanks so much.
Thank you.
Yeah, I think we can take it during the break session. Thanks for your interesting questions. So once again, thank you all for this interesting session. I think it's time for a break. Yeah, over to you.
And as we were talking about technology, we have our presenting partner, Dell Technologies, specifically for the small businesses. Anybody who wants to talk about the technology, Samriddhi, Resa is there, you can talk about the Dell Technology and their products that they have.
Let's have a huge round of applause for the panelists. It was a very insightful session. So, I would like to request Ms. Samriddhi Bhattacharya to join us on the stage to felicitate the panelists. I would also like to invite Mr. Sandeepan Ray, our founder director, on the stage for the felicitation. And also I would like to invite Ambika Yadav, senior program manager for SMBConnect. Let's have a huge round of applause for all of them. Thank you, Samriddhi. Thank you, Mr. Mahesh. Thank you, Mr. Chandran. Thank you, Mr. Shyam, for your valuable time and insights. Now, ladies and gentlemen, as we pause briefly for a well-deserved intermission, let's seize this opportunity to engage in our spirited exchange of ideas and forge valuable connections within our vibrant business community. I would also request everybody to visit the Dell Technologies booth, our D2C brands booth, and if you want to join our community, then visit the Join Our Community booth. Also, scan the scanner on your tables to get connected with the latest updates on WhatsApp. So, let's meet again in another half an hour.